the inevitable happened.
1929, Black Tuesday. The New York Stock Exchange is in a panic. Frantic investors have scrambled to unload their stocks at any price. Everyone wants to sell. No one wants to buy. Suddenly, even the most gilt-edged securities are practically valueless.
The tremendous crowds which you see gathered outside the stock exchange are due to the greatest crash in the history of the New York Stock Exchange in market prices.
The factor which determined the amount of the decline. For some time, stocks have been rising at rather rapid rates. Corporate earnings have not been rising. Dividends have not been increasing. And it's not to be unexpected that perhaps a correction of some of those unusual factors on the upside might occur on the downside.
Some observers from time to time say that the stock market is a forecaster of events to come. Can you predict, or would you care to take a look at what you think this might be forecasting, the decline?
The stock market has been a good forecaster from time to time in the past. It also has been a rather poor forecaster occasionally. For example, the last 4 or 5 years, the stock market has been booming along and presumably forecasting better business, which has really not materialized. Corporate profits are not any better than they were 5 years ago, but stock prices are 50% higher or thereabouts. So maybe the stock market is really correcting a previous incorrect forecast this time rather than making a new correct one.
Good evening. Today is Black Monday, the day the Dow dropped more than 500 points, the day the Dow dropped more than 22%, almost double the rate of the Black Monday that signaled the beginning of the crash of 1929. But this crash of 1987 is not just an American experience. Around the world, stock markets fell faster than a skydiver without a parachute. The panic starting in Tokyo this morning while the West slept. One cause of the sell-off was reaction to last week's 236-point drop in the Dow. The result, the Nikkei average was down 260 yen. Then, like a plague, sell fever headed west.
It's a panic. Everyone's in panic. Everybody, we're trying to find a bottom. We're trying to, as a floor broker, I see stocks trading 10 points below where they traded Thursday, and I'm saying this has to be the bottom. And then they trade 5 points lower than that.
By noon, the market was down about 150 points. The tape delayed by more than an hour. But it only got worse as trading brokers struggled to cope with a blizzard of sell orders. Market hit a high of 2,722 last August. It lost 17.5% of its value to 2246 by Friday, and another 508 points today. The results of the decline will hit millions of people in their investments, pension plans, their mutual funds, and eventually every segment of the economy. Higher interest rates, for example, will hurt the housing market. Even normally optimistic analyst Larry Wachtel doesn't see a quick recovery.
What usually happens in cases like these where the psychology has been so scarred is that once there is a technical rally back in which people unload on the rally, and you go through a long quiet period. The people that got out don't want to get in. The people that wanted to get in aren't sure about whether they want to get in now. As you go through a long quiet convalescence period.
President Reagan, however, was more optimistic.
Where our productivity is up, so is our manufacturing product up. There is no runaway inflation as there has been in the past. So, as I say, I don't think anyone should panic.
Purvis was a 24-year-old waiter wiping tables in Manhattan when he borrowed $3,000 and launched himself onto the stock market. He had no experience, no help, and no broker. Just a lone computer and iron nerves. Now 25, Nick has his own apartment block and, of course, the shiny new Corvette.
I started out with 3,000, and currently I'm up to 500,000.
Is this your version of the American dream?
All my friends tell me so.
If you don't get on this technology boom, if you don't compete, if you just kind of look around and resent that you're falling behind, you're going to just be left in the dust. You're going to miss the whole thing.
I bought 1,000 shares at 11.09 at 27 1/8.
Scott Friedman has the advantage of the newest, fastest technology. But he's not alone. Around the country, 8.5 million people are using their computers to play the market.
I sold another 300 at 3/4.
The trend is sending an already booming market through the roof.
Don't think the market's going to go back down to 1,000, 2,000. Could it see 7,000 on the Dow now that we're almost at 11,000? Yeah, it could. But then it'll probably see 15,000 by 2005. But I think we are in a great bull industrial revolution for the global economy and a great bull market in stocks.
Well, I don't describe it as a bubble. There's a phenomenon with internet stocks versus all other stocks. That's been going on since the internet started. That phenomenon continues. As long as people are inspired and think that the internet is something huge and different, the valuations will continue to be huge and different.
You know what? It is no different than when the cable industry started. It's no different from when the first television networks started in the early 1900s. The reality is any time you have a new set of companies that can capture the potential for a massive audience, they're going to see those high valuations because they can have access to all these users.
The old timers like us wait for the day of reckoning. Wait for these people who are speculating to be smacked down. Everybody's invested. Everybody's happy. Everybody's making money. Something's wrong here.
Hopefully there is no end. I mean, there is always an end to our individual lives, but I think the internet technologies, the technology revolution has already created an enormous amount of prosperity for all of us worldwide. I think that's just going to continue. There's no reason why we couldn't extrapolate that to the moon at this point.
If anybody had done any homework at all, you would have seen this was the same thing all over. When an industry's hot, money piles into it because the people who are smart money, right, they figure they can pay attention to who else is buying. And they know if there's enough greater fools coming in, they have a way to get out. And as long as the fools keep on rushing in, they'll keep on buying because they're watching on a minute-by-minute, day-by-day basis. The whole stock market's a greater fool theory, and, you know, for whatever reason, people didn't realize that.
A presidential address to the nation.
Good evening. This is an extraordinary period for America's economy. Over the past few weeks, many Americans have felt anxiety about their finances and their future. I understand their worry and their frustration. We've seen triple-digit swings in the stock market. Major financial institutions have teetered on the edge of collapse, and some have failed. As uncertainty has grown, many banks have restricted lending. Credit markets have frozen, and families and businesses have found it harder to borrow money. We are in the midst of a serious financial crisis, and the federal government is responding with decisive action.
0.7% here, a loss of 37 points or so. Apple shares are just getting hammered this morning.
We're down by between 3 and 4.5% generally across these markets. Let's talk about the speed with which we are watching this market deteriorate. We're red everywhere, essentially, down by 4-5%.
We're down over 16%. Dow at the same time has fallen about 18%.
The stock market is now down 21%.
Because we're now down 43%.
What in the world is happening on Wall Street?
Two-year note yields went from 190 to 166 in the blink of an eye.
On the NASDAQ, everything and more has been completely wiped out.
It was the worst day on Wall Street since the crash of 1987.
From the financial capital of the world, the opening bell is going to ring in 5 seconds, and to be honest with you, we wish it wouldn't.
Traders here working the phone say a lot of their customers are freaked out, waiting to see how low the Dow will go. They're focused on the Dow, not so focused on OPEC. Yes, OPEC did cut production by 1.5 million barrels per day.
Really, you're seeing just broad-based declines across all of the major technology sectors. Apple's under pressure, Yahoo down 8.5%, Cisco 6.5%, Research in Motion 10%.
And we're not getting the bid wanted. We're not getting the stop trading, and we see where the buyers are. We're just, every day they're pounding it.
The heightened financial turmoil that we have experienced of late may well lengthen the period of weak economic performance and further increase the risk to growth.
Can't look at it after you buy it. It's so horrible.
But we've had an 8-day losing streak in the Dow that in percentage terms puts it on par, close to the loss suffered in that crash in 1987, close to that percentage loss those 2 days in 1929.
What started in America last year has now spread to every part of the world.
We're down 9% today. The Xetra DAX over in Frankfurt is down by 9%. The Paris market down by 9%. Austria, which was briefly suspended earlier on in the day, is down by nearly 11%.
With adjustable rate mortgages who had been planning to sell or refinance their homes at a higher price were stuck with homes worth less than expected, along with mortgage payments they could not afford. As a result, many mortgage holders began to default. These widespread defaults had effects far beyond the housing market. See, in today's mortgage industry, home loans are often packaged together and converted into financial products called mortgage-backed securities. These securities were sold to investors around the world. Many investors assumed these securities were trustworthy and asked few questions about their actual value.
From what I've heard from people that know a lot more about viruses than I do, that unfortunately this will make it through the summer, and in terms of having a vaccine, it's a long ways off. So you've got it is scary stuff. I don't think it should affect what you do in stocks, but in terms of the human race, it's scary stuff.
To unleash the full power of the federal government in this effort today, I am officially declaring a national emergency. Two very big words. The action I am taking will open up access to up to $50 billion of very important and a large amount of money for states and territories and localities in our shared fight against this disease.
We are entering one of the most perilous moments for the stock market. We had the huge sell-off, right, down 35% from the highs. Then the giant bounce back this week, up 19.9% going into today. And then a real pasting, most of it at the end of the day, with the Dow ultimately slipping 915 points, S&P declining 3.37%, NASDAQ falling 3.79%. Again, just like yesterday, when it had the big whoosh up, this had the whoosh down at the end of the day. I hate that stuff. Now.